All right, good morning, everybody. Good morning, Marziti here. And let's go over some stuff here on the chart. Y'all may notice, if you look over in main chat, I posted something called today's Rorschach chart analysis. And I'm going to try and remember to do this most mornings right before the chat because I want to talk about, as part of the educational portion, what do we see in that chart and that kind of thing there. So I'm going to tuck this up here for the moment as a reminder. Let's get on over to starting to take a look at our charts here. We're going to start here first with the daily. And actually, let's start with the news. What did we have? What are we looking for? We had ADP came in. ADP employment change, 143,000 jobs were reported. Forecast was 125. One of the things that we have seen with these kind of job changes have been revisions. And sometimes those revisions can be rather substantial. So we have to realize that there are two types of reports. Now, the ADP is a pretty straightforward one, but some of them, like our CPIs, PPIs, PMIs, blah, 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 come out with a flash report. And then there are others that come out with just a one-time report. So the market generally moves on the flash report unless the revision comes in and is dramatically, the finalized version comes in and it's dramatically different from the flash. We did have that happen recently with a revised jobs report or something like that. But today, jobs beat expectations. That's usually a positive for the market. Let's take a look. Anything else going on today here? We've got Fed speak starting at 9, 10:05. If you're trading the crude oil, watch out for 10:30. That is the big report of the week for crude oil. We do see that crude oil is reacting a lot now to the increased activity in the Middle East with Iran and directly going and Israel going directly at it instead of the proxies of Israel and Hezbollah and all those others there. This can blow up and and escalate, and so just kind of be aware of their certain things. And of course, we got the port strikes. My sister-in-law was at the local Sam's Club yesterday. She said she'd never seen it so mobbed and packed in her entire life. And she said when she started talking to people, it's because the port strike and everybody's having a COVID moment where they mobbed all the grocery stores and all the supply stores thinking that we're going into absolute shortages and we got to buy everything right now. So I'm like, 4 years ago, we had COVID and we made it through as far as the supply chain. Yeah, we had some rough spots in the supply chain, but we made it through. And it's 4 years ago. Here we got a strike going on the West Coast, and everybody's like, oh, it's the end of the world. Run out and buy everything. We can talk about the criticisms all you want to. The point is that people and the markets react, and we need to plan on these kind of things and make our trading plans accordingly. Crude oil right now is going up because of the Middle East stuff. We've got a lot of Fed speakers going on out here today. So remember, a Fed speaker can say one thing, just one thing. The algos get it and they take off running with it. So just remember that, that even though we hear about them talking, they can say one thing and totally flip the markets. Okay, now starting off with different things here. As we see, crude oil is running very bullish because of the Middle East. We had a big indecision candle yesterday. Today we are starting to see some bullish activities. Obviously we barely taken out this high from back here. What was that, the 24th? Excuse me. We barely took the high on that 24th. Now, at this point, we only consider it a liquidity run because it went back inside. So this candle went up, grabbed some liquidity, and then has rolled back inside of that zone. So this is not a bullish indication yet. Meaning that we don't know what it's going to do. It can go up, it can go down. We do see that on the daily level, though, IV is up, which tells, and rather substantially considering the average is 0.43, it's now at 0.48. We normally don't see, these. Obviously, there are times when we see the spreads are wider, but on many days there, we only see the spread is like, if it was 0.43 here, we'd expect to see 0.44, maybe 0.45. But so 0.48 is a fairly, that 5 hundredths up is quite a bit. So we can expect quite a bit of movement in crude oil. Moving over to the ES, again, notice this, good size candle, good size candle, good size, and then now not so good candle. And so we see that this bullish movement has lost a lot of its steam, and we're starting to roll back over. Ignore this line for the moment. I'll come back to that line here in just a minute. That is the SPY equivalent of where the SPY closed when we talk about the gap fill. Any rate, so what are we looking at? Well, we've got, and let's just open this up a little bit. Did we take out, and this is not what I'd call a very significant low right here. It is, but this close on this candle was what, 58 and a quarter. This close 58 and a quarter. So we came down to it. We did not run through it. Now that's not to say that we didn't take liquidity, because some people could have moved their stops up or whatever. What are we looking at here so far? What we're looking at, more than likely, we are in the lower half of this previous candle. That obviously is bearish, and but kind of notice, like I said, we've got some revisiting to do here. That if we were to draw a fib from here to here, if we do in fact roll over, that's going to put us at 56.50 rather, excuse me, for a half-back mark. So, is that going to happen? We don't always know. A lot of it depends on what the news is and the sentiment. But, I heard, Signet was talking this morning that a lot of the institutions feel that some of the expected glory of the interest rates being dropped in the upcoming FOMC meetings has kind of been tapered back a little bit, and so the markets are like, oh, well, they've kind of lost some of their excitement as far as going bullish, because, while we do expect more interest rate cuts, maybe not as good as we thought they would be, at least in this year. So we can, obviously we've got some possible rollbacks here. We had a pretty substantial red candle here, but we are still in the shadow of that red candle. So we're going to have to wait for a break of that on the daily. Now, again, we're looking at things on the daily. Here we've got gold moving up, starting a rollback, but nothing dramatic at this point because, you can see we had a rollback and then a continuation here. A lot of times gold is going to move inverse to the ES and the NASDAQ because gold is historically that flight to safety. If we think that the ES and the NASDAQ are going to go south, gold many times will go north. Now, that was the traditional relationship before crypto hit the scene. And then a lot of people, instead of going into gold, because a lot of it was, quite frankly, it was expensive. And so a lot of our investors moved into crypto. So this old relationship of gold and silver being very much opposite of the ES, that relationship is really not as strong as it used to be because now we've got gold and Bitcoin or other forms of crypto. Excuse me, we got gold and let's say Bitcoin as alternative as the flight to safeties versus the ES, the SPX, and the NASDAQ and all that. So that split, where gold and silver were the only contenders, has now made it that relationship's not quite as strong, but it's still there, and to some extent. So if we obviously start to see more of a sell-off on the ES, we still will probably see some rally on gold. Okay, let's get down to within the trading zone. What are we going to trade today? Let's start with the 60-minute. Now, y'all know I like things like, all right, go away. There you go. Y'all know I like things like this. First look at the pivot points and the intraday implied volatility. So we see here pivot points are wider on quite a few of these. That tells us that the goalposts, or the touchdown lines, if you will, are further apart. Well, if the if the runners, if the football players if they're used to 100 yards and we move the goal lines out to 110 yards, then they got to run further to get to them. And so that means a lot of times that it just doesn't happen as often. So if we do see breakouts, we're not expecting a run. A real big continuation run. On the other hand, if the pivot points are more narrow, then yes, we typically see, pardon me, we typically see more of a, if a breakout happens, we typically see that they're able to just keep going with it. So here on crude, we're seeing wider pivot points, although we are seeing higher implied volatility. So I think there'll probably be some good intraday swings in there, but I think it's going to be, I wouldn't be surprised if we don't see a lot of chop right now because of the Middle East. Same thing here with the ES. Gold, on the other hand, pivot points are tighter. I like that. I actually traded gold this morning and made a very nice run, shorted it this morning, did real well with that. And but so we do see this implied volatility is average. It's average at the moment, but the pivot points are tighter. So I do think if it breaks, it's got a better chance of running. NASDAQ pretty much the same as usual with the ES. I want to talk for a quick moment here about the SPY gap. Let's just really zoom in on this. We're going to go over here to Edgeville in just a moment. This is the close yesterday on the SPY. We find that, especially with like Edgeville, they have statistics on the return of the market after the New York session begins at 9:30 Eastern to close this gap. Well, we can carry that same concept up here to the ES, and that's what this purple or pink line is, the equivalent line. Now, bear in mind that the futures close at 5 versus the equities, like the SPY, close at 4. Well, since we're going to be looking at the statistics on the SPY, we're going to mark this at the 4 o'clock close, so you'd go to the 3 p.m. candle. We'd go to the 3 p.m. This is actually in the wrong place. So that needs to move to the close, not the low. There. Again, we're on the hourly here. You can see will you go here? Let me just pin it. That'll move everything down. We're on the hourly here. So when I look at the 3 p.m. candle, and this is one thing we got to remember about charting, when we look at the 3 p.m. candle on the hourly, that means it went from 3 p.m. to 3:59 p.m. So you could say it would be the open of the 4 p.m. candle or the close, typically, of the 3 o'clock candle. Anyway, that line goes right here on the ES. So we're looking for, if there is a good call for us to close that gap, we can possibly make it back up to that point, which would be the equivalent on the ES versus the to the SPY. Let's go ahead and look at that real quick. I want to get over here. All right, so we're looking at stocks, price action, gap fill on the SPY using the last 6 months. We're also going to look at it by weekday. And let's just kind of come in here and see what Edgefield tells us. Edgefield tells, now we're in a gap down, and they tell us there's a 71% chance that it will be filled. We look at by fill time, and we see that, and we can, if it's we're in a gap down, we need to, actually, let me back off a little bit so I can make some settings here. We want to customize it. Let's just say within the first hour. Actually, first hour and a half, because that'll be 9:30 to 11, which is where we typically do the bulk of our trading here. Okay. We find that in a gap down situation, that by 11 o'clock, there's a 75% chance that it will close that gap. So we've got some really good statistics saying that this will happen. Again, we have to remember, though, that 75% chance that it will happen is also a 25% chance that it will not happen. So unless you want to absolutely specialize in statistical trading, and that's perfectly fine strategy, you can help. This may help you with your bias a little bit, but this does not mean that you just blindly take a trade. We still want to watch and see what happens with it, unless you're going to actually specialize for this. Let's see. Let's also take a look. Let's go over here to the ES. And I kind of want to zoom in. Actually, let's go down to the 15. How can you relate this metric with price action on the first team? Okay, that's a great question, Ironclad. So there's an old concept called ORB, open range breakout, and it has to do with the first 15 minutes. And sure, let's go look at that. Let's go over to futures. Let's go to the regular trading hours, 9:30 to 11. Let's go to the ORB, opening range breakout. Let's look at this by weekday. We're going to use the ORB looking at the first 15 minutes. Okay? So if we zoom in here, we see that now they say throughout the day, I did set, wait a minute, let me double check something. Yeah, I did set our session here, though I did constrain our session to just 11 o'clock. They say that there is 38% chance of a breakdown, or excuse me, breakout going north, 26, small edge going north, but they do have a 35% chance of a double break, and that is by today. Now, different days, different samples and stuff like that. If we tighten this up, okay, there we go. If we tighten this up, then we will see that the more recent shows almost an equal weighted chance of a breakup or a breakdown, but a lesser chance of a double break as far as the orb. Now, let me go over this orb very quickly. So the orb is the opening range break, and what we do is we take the first 15 minutes, or you could use the first 30 minutes, whatever your strategy is. We look at the highest high within that first 15 minutes, the lowest low in that first 15 minutes, and we basically set our, we'll say we'll make a box around that. And we're saying, well, will it break higher than the highest high or break lower than the lowest low? And that breakout, now, and that's called the orb, the opening range breakout. So we're saying here that there's a 38% chance that it will break to one side, but now it's very important we understand something. We say it'll break to one side, and that it will not come back through the orb and break the bottom. So it's important to understand it can still come back into the opening range, but it can go one tick out of the opening range, come back inside the box, and that still counts as a breakout as far as these studies go. What this is saying is that there's a 38% chance that it will not take out one tick at least to the top and one tick to the bottom. That's called a double break. So here we also have a 38% chance that it'll break to the downside and not come back through the box and take out the other side. So that's the important thing to understand. A lot of people think, well, it broke to the outside. It's not supposed to come back inside the box. It's supposed to go. No, that's not what it means at all. It can still come inside the box. It just means it's not going to break the opposite side of the orb unless it's a double break. So we do kind of have to bear that in mind. So this is kind of a cool statistic here. Is it helpful? Well, if it does break, here Edgefield tells us typically what we can expect, and that is the average breakout, if it does go north, is going to be plus 0.22%. So just as a very, very quick sampling of numbers, let's just say, I'm just going to pick very quick numbers here. Let's say that price is at 5,600. If it goes to the north, I'm going to multiply it times 1.0022. And it says that it'll go up to from 5,600 to 5,612 is the average breakout to the north. On the other hand, if it breaks to the south, let's just say if 5,600 times open parentheses 1 minus 0.0031 close parentheses would take us from 5,600 down to 5,582. So that's how that opening range calculation works. So again, obviously you can see there's a stronger pressure towards the downside if it goes that way. Okay. Uh, I did mention the SPY. I don't remember if we got into that or not. Did I get into that? I don't know. Let me just touch it real quick. Stocks, gap fill, SPY, 3 months, bi-weekday. And yeah, yeah, we did talk about that. Okay. 70 some odd percent chance that we will fill that gap. Okay. So really good stuff there on Edgeful. Now again, so where are we now? We're at the 15. Let's talk about that, and then I want to get to the Rorschach thing. So what are we seeing here? We see this. Actually, this is still that close. The charts are fairly close, so we'll just go ahead and kind of do that. Let's just start with crude oil on the 15. Now the 15, the pivot points are white. Well, I mean the pivot points are the same on all time frames, but we do kind of see we had this DeMarc trigger here. It is now going down. Again, the DeMarcs can kind of give you a heads up of something coming, but here you can see, for example, here was a 10, here was an 11, here was a 12. We had a 13, and this was the whopping sell-off from it. So again, we don't develop a pure trading strategy on one thing. We always have to take things into the bigger context. So what's crude doing now? Well, we came out of this little consolidation area right here, pull back, run. Well, if we were to take here to here, we will see that it basically hit the 50 and the 61% targets. In fact, it hit that 60.618 practically to the tick, and then it's rolling back inside the box. Where will it go? Well, I think it's got a pretty good chance of coming back down here to around 71.4, which will also be in this little consolidation zone right here. So, that's very possible, but I think it'll just be a wick, and we'll have to see what it does from there. So right now, I like the pivot points wider. No, excuse me, I dislike the pivot points being wider. I dislike the pivot points being wider on the ES, but as you can see, we're in a range, and that range is right here. From this low, which took out previous lows, this high took out some highs. We took liquidity, and we're just inside this range. And where will we go from here? I don't, unless you're scalping, I just don't see. I mean, there's a good 25 points in here, so there definitely could be some good trades on a shorter term. Some scalping and some stuff like that, and maybe some good 5-10 point trades as a whole. If you're a longer term trader, wait till we get out of this box because that's just chop. So I mean, it's got a good range to it, and that's a blessing and a curse because it's a curse because it's a large chop zone. Also notice we've got this range, which I'm just going to kind of call it, let's just kind of go from like right about here. When we see how we keep coming back into this range, we came up into it, we went over it, we came back into it. This is a chop zone, and that to me means it makes for a great target, but I would not take a trade while in it because of the chop. And you can see all these wicks and stuff like that going on. So, if you want to short down into this, that's very possible. But if it gets back down into here, I wouldn't touch it because of the wickiness that you may get thrown into. Finally, looking at gold. Like I said, I shorted gold this morning. I was in this trade right here, and got a nice little run off of that. But notice here we've got a big push down, We took liquidity from this low here, immediately went back up, doji spinning top here. Watch this candle right here to see which way it breaks, because that's going to be very important to see where we're going to go. I would very much watch this candle in relation to this. It's not quite technically a doji, but it's real close to one. It's technically right now it's a spinning top, but at any rate, I would see how right in the center that is, how tight it is. That represents an incredible amount of indecision. I would be very careful to watch for the break. If you break, obviously this is your first target north. This would be your second target north, and so on. If we go south, first target, second target. And there's some pretty good money in that trade right there. So just watch that and see what happens. Okay. So let's go over to, let me just look through the thing here. If anybody's, no, I don't see any new questions. Okay. Let's go over here and let's talk about very quickly my little challenge to you. I want to try and do this and do these kind of things as much as we can in the mornings here. Starting with crude here on the left, what do we see? It might help if I pick a color that you guys can see. Go away. Well, hang on. Let's pick the line tool. Let's make sure we're doing white. And I got to hold the mouse button down. Okay, there we go. What do we see there? We see, first of all, that we have a trend line. Oops, I didn't want to do that. Click. All right, we'll get this right in a minute. No, that's not what I want. Let's try that again. Here. And we've got a new line. We've also got a line that went here. Okay. We break this line. We're looking for it to go south, come back up. And if I zoom in on this at the time, we see it breaks. It closed below the line. It went back up, retested it, and then broke south. That would be a very possible trade to the south because of the fact that we broke this low. We broke both of these lows again. Now, where would our stop be? Would be above the candle that broke below the trend line. What else do we see in here? We see an up, a down. That gave us a box. And so if we were to extrapolate this box right here, you would also see, I don't know if I can't duplicate this here, but you can see as I put it to the top here, and let's zoom in on that, a 100% measured move. Right there it is. You see that green candle did a 100% measured move. So there was a box trade. There's a trend trade. So there were two trades in there. Let's look over here. All right. First of all, we see a start with a line. Again, we learn to do these things, and everybody's going to see. The reason we call this, I call it the Rorschach chart, is because everybody's going to see something different in it. Everybody's going to see something different, and say that because of, everybody's going to see something different based on your trading style. And there's no right or wrong to this, but the key is to start looking at these things and seeing the setups. We see a trend line there. I see a trend line here. I also see that didn't work at all. Left shoulder. Quit. Head. Right shoulder. So there's a head and shoulders on that. Where is the neckline? The neckline is this guy right up here. That is your highest neckline. Because the neckline comes after the shoulder. It's not this over here. It's this line right here where I started that trend line. That is the neck. So we would be looking for price to come up, close above this candle to the north, and then we could take the break of that candle and go north with a possible head and shoulders. Do we see, can we say that this is a supply and demand zone? Possibly. Now, Kevin would probably say weak if at all. And, he may even say there's no supply, no demand zone there at all. And that's fine. But we do see a pretty big rejection from this area right in here. So we do see a pretty big rejection right there. So we possibly could call that a supply zone, rather. If I said demand, I meant supply. We could call that a supply. It's also very possible, though it'd be kind of big, to say this. Kevin's more of the authority on that kind of thing, but that could be a possible supply area. All right. Are y'all starting to see that there's many things that we can see in these charts? Lastly, let's take a look at the gold over here. And I can't do that and work at the same time, sorry. Let's see, where are we? What do we see? Try that again. There's a possible trend line. Maybe that's a very weak trend line. It's only 2 points, and it's based on the wicks. So it's very weak. Okay? But it does kind of indicate we're going into a pennant. We also see, I do see a possible box set up in here. It's a bigger box going from here to this candle here, because we've got a low, we've got a high, and then it moved back in 50%. So there's a box set up that you could trade. There's many different trading strategies to be seen in here. And I'm not saying you have to be able to see all of them, and I'm not saying whatever. The point being is that, learn a couple different strategies. You don't have to trade them, but you should be aware of them. For example, I don't typically trade supply and demand, but I would mark this area off because I expect price to react if it were to get there. I would also, here on this same chart, mark off that zone right there as a chop zone, as in a no trade zone, because you can see how price came into it. It comes back, came back to it, went up, came back to it. We spent a lot of time hovering in that area. That is a chop zone. I do not want to initiate or start a trade in that zone. Because why? Choppity, 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 chop. But if I were short from up here, let's say the price reaches back up here and I'm going short, yeah, I could target this zone, but I would not initiate a trade in that zone. So, anyway, so there's today's Rorschach charts and different things to see. And so I hope you guys can get something out of that as far as always looking at the bigger picture and not just at the microcosm of what the trade looks like right now. Always look left and see what's going on and to give you some ideas of different things. With that, it's 9:10. So like I said, I've used a lot of different things with Edgeful, and I'm just simply going to say they gave us a complimentary account to show you guys, to show their platform to you guys. I'm not an affiliate. Bullish Bears is not affiliated with them in any way. We don't make any money in any way if you decide to go look at them, nor am I going. I'm just saying they do have a 7-day trial. If you want to go look at it, fine, no obligation by any means there. But if you like statistical trading, you might check it out, kind of thing. So, at any rate, no major events other than crude oil at this point at 10:30, and we've got a couple possible trade ideas. I'm seeing this 50% halfback go here. I expect, based on statistics, to see the ES get back up here to around the 57.60-ish line, if that statistic holds true. And gold, pushing back up. I could definitely see it hitting this pivot point here again at some point today. So, any questions or comments before I wind this down? Okay. Oh, wait, let's see. Asian session. I've almost forgot about that. Let's go look at the Asian session on the ES. So Asian session started. That's not what I meant to do. I'm already in it. The high of the Asian session was this candle, and it closed at 2. Notice, so here's the Asian session. The Asian session closed red. Is there a correlation to the ES and with the Asian session? And let's just go over here and take a look at market session correlation. We're looking at Tokyo and New York. Let's the last 3 months. Okay. And it says, if Tokyo closed red, there's a 50. Okay, there's really no edge in that. No edge at all. Let's see if we get anything different. Previous close to close. Okay. Is there anything we can do to fine tune this? No. So no statistical edge there in that over the last 3 months. If we look at it over the last 6 months and we have a larger sample size, then it says Tokyo closes red 50-50 on the New York red there. So, okay, again, no help on that one there. So we have found some statistics here that may give us some insight, and we looked at orbs, we looked at the Asian sessions, and so on. All right. With that, certainly if you have any other questions, feel free to drop me a message, and we can certainly always talk about any of that kind of stuff. And this, I'm going to wind it down here, folks. Like I said, if you can't be good, at least be good at it. And this is Marziti signing off.